नहीं 70-75 के बाद भी मेरे को लग रहा है 20-25 साल अगर जिंदा रहना है तो करेंगे क्या?
So if you had to start an asset management company in 2025, what would you do differently?
A lot of times I learn purely because 4 times a week I do public speaking and I meet so many people. They ask me such a broad variety of questions that it really makes me think. People who are 10, 20, 30 years younger to me, I'm convinced they are much smarter than me. I have zero doubts about it. जितना आपको उसके मैकेनिकल सिस्टम पे कॉन्फिडेंस है ना, उतना मेरे को मार्केट पे कॉन्फिडेंस है.
Hello and welcome to another episode of ZFunds-The Sahi.Asaan podcast. Our guest today is someone who's possibly the only leader in the industry who's built not just 1, 2, but 3 AMCs from the ground up. While others are trying to figure out what the youth and Generation Z of this country think when it comes to investing, he's not just figured them out, he speaks their language. Clearly, Aashish Sommaiyaa is one of the most relatable asset management company CEOs in our country. And not just that, he's a very forward-looking voice when it comes to investing in India. Welcome to the ZFunds-The podcast, Aashish.
Thank you, Manish. Thanks for having me.
Right. What we'll do in this episode is we'll do something different. We'll start with the rapid-fire round first before we move on to a more comprehensive discussion. But before I get to the rapid-fire questions, let's talk about that jacket. Your jacket is a rage. I know you're not wearing it for our episode, but just like you are very popular on YouTube, your jacket's quite a statement too. What is it? Is it a gift from someone special? Is it a signature style statement? Tell us about the jacket.
No, not really. So it's actually, I always like layers. Even if it is warm or even if it is hot, I always prefer layers. I feel more comfortable if I'm in layers. Sometimes it looks odd. That's why I'm not in layers today. But I always like to wear jackets.
Right. Layers. Maybe we'll come back to that during the episode.
That doesn't say much about my personality, only about my clothing.
Right. So let's start with the rapid fire set of questions. One thing you do different than other AMC CEOs.
I like meeting. I know that in our profession, I think people meet a lot of people. That's true. But I think I'm out on the road almost like 20 days in a month. So, bulk of my work when it comes to office, it happens on Zoom calls and phone calls. But otherwise, I'm always in a different city almost practically every day.
One lesson that the stock market is yet to teach you.
I hope there are not any more left, but that's not the stock market. So I don't know what I have to learn. If I knew what I have to learn, I would try to grab it. But what I don't know.
A mistake you're glad you made early.
Dabbling in stocks in late 90s. Tech stocks and 1999 rally. I think I was just out of college, started investing, lost money very early, and realized that if I'm telling others to invest in mutual funds, I should invest in mutual funds. That's what will work best for me.
Most overrated investing gyan.
Most overrated investing gyan. I don't think there is any which is overrated, really, if you ask me. I think all investing gyan is welcome. It's just that, there is no one definitive thing. There is always context and perspective. So I can't come across anything which is really overrated in that sense. I think, in fact, everything we know, we need to keep repeating, and we need to learn more things. I'm not a fan of, personally, if you really ask me, I'm not a fan of, people do, very high interest rate fixed income kind of stuff. Like in my personal opinion, there is nothing called high risk fixed income. If I have to take a certain amount of risk, I'll be in the stock market.
One lesson you've learned from a client or a distributor of mutual funds, which no analyst has taught you.
Recently, somebody asked me that, you talk on so many different, platforms and so many different fields and so many topics, and how do you read and how do you learn? If I told that person that a lot of times I learn purely because 4 times a week I do public speaking and I meet so many people. They ask me such a broad variety of questions that it really makes me think. So now I'll give you an example. I was talking to a client once and I was telling him that you should invest in the equity, you should invest in stock markets. Now it's slightly long, but it's a very insightful question. He said that the rate on bank deposits is 7%, right? Which means that if you put $100 in the bank pays you 7. Which means that in the bank, for every 1 rupee of earning, you're paying the bank $14, right? But if you go to the stock market, your Nifty is trading at a PE multiple of 22 or 23 times, which means to fetch every 1 rupee of earning from the stock market, you're paying 22 or 23. So then tell me, why should I invest in the stock market, right? So obviously, I mean, for a moment, it was a very simple question, but for a moment I was stumped. So then obviously I had to explain to him that, sir, for the last 32 years, even for an index like Sensex, the EPS has grown at about 12 to 13% compounded. So in the bank, your 1 rupee remains 1 rupee. But if you put money in India's stock market, the 1 rupee becomes 1.12 and 1.27 and so on and so forth.
Right.
So if you do a 10-year deposit, in 10 years, the bank will pay you $10. But if you put it in the stock market, at the end of 10 years, you'll get 18 rupees 85 paisa. Right? So what happens is we all deal in EPS and EPS growth and PE multiples. But see how straightforward and simply the client put the question. It really made me think for a moment, despite all the mathematics and the gyan that we do. Sometimes, information which you know, but if it is put in a different format, it makes you think.
Gives you a different perspective.
Absolutely.
With that, we end our rapid fire round. So let's get into a more detailed discussion. Ashish, you've helped build mutual fund businesses from scratch. AMCs that had AUMs of a few hundred crores now have AUMs of 60,000 crores and all above. But beyond numbers, what is it that takes to build trust, confidence, conviction in fund management process when it comes to building a mutual fund business in such a complex and emotional market like India?
So, 2 or 3 things. I think the first and most exciting part about building any business, may it be an asset management business, and you are an entrepreneur yourself, so you will appreciate this, that AMC or no AMC, any business, when you're building a business as an entrepreneur, we all have the choice of doing a particular job, right? I mean, you go to work at 8 o'clock, come back at 8 in the evening, and you will earn a salary and things will be fine, right? But when you become an entrepreneur, may it be a professional entrepreneur or may it be your own entrepreneurship, what happens is that your hypothesis, your beliefs, what you think about the industry, what you think about where the white spaces in the landscape are. See, from the outside, our industry looks very crowded. But when I function as a professional entrepreneur or as a CEO, I have to make a hypothesis about the landscape. I have to hypothesize where the opportunities are. And then when you lay out a plan and you start executing, that's when your hypothesis gets tested, right? And then either it's right or it needs tweaking. So I think that's the most exciting part, if you really ask me. The second thing is that, we all have, most of us or many of us or all of us, we may have this belief that I'm supposed to know everything. But what I've learned is that I don't think anybody knows everything. And I don't think people know too much beyond a point. The only thing that you need is that wherever you are in your journey, as of date, if you are true and genuine, you say what you know and you say what you don't know. I think people respect that. Nobody expects you to have all the answers. What really puts off people is when you feign to have all the knowledge, right? But if you say, okay, as of today, this is what I know and this is how I am positioned, and I think this is the probability this will work out. And if things don't play out as I plan, then I'm willing to, make amends. I think by and large, people respect that. I think that's enough. As long as you're real, I think it's fair. There are 2 reasons to this. One is that, we are in a market, we are in an economy, we are in a country which provides a canvas, where ideas can be tested. And, you will get feedback, right? The second important thing is that all of us are part of the capital market. Now that itself, within this country, capital market itself is a great place to be in.
Right.
The reason is because our best is, in front of us.
Right.
So always excited.
Right. Which brings me to a follow-up question. You built Motilal Oswal Asset Management Company from practically 0 to 1. Just when it was up and running and doing really well, you decided to do this again for WhiteOak. What was the motivation? See, clearly, let me put it this way, that in an asset management company, I always believe sincerely that 90% rule of the business is investing. I can be an entrepreneur, I can be a professional CEO, but if the investment acumen is not in place, then any professional, however good. So that's the first thing I want to clarify, that none of these, none of the endeavors are like a solo enterprise kind of thing, right? Motilal Oswal, the investment culture was set by my ex-boss, that is Mr. Ramdev Agarwal. And WhiteOak also, is founded by a professional portfolio manager, Prashant Khemka, who's our founder,
Before starting WhiteOak, he was CIO for Goldman Sachs, worked there for 17 years. I think he has experience of investing all over the world. So let's say when I decide to work for Motilal Oswal or when I decide to work for WhiteOak, I'm very clear that these are organizations which have very strong investment acumen. And based on that investment acumen, we can bring something which will add value to clients' wealth creation process or portfolio management. Now, why did I if you really ask me, it's a professional challenge. That's the first thing. Because when you work in a firm, when you help the founder to build it for 8 years, it reaches a certain level. And then, yes, like I said earlier, you had a worldview, it's got tested, and to a sufficient extent, it's played out as per what you thought it should. And then, when I met Prashant, for example, and I was invited on board to WhiteOak, I felt that, the team and Prashant has the investment acumen and they have something to bring into the market which will add value, which is a different way or a more institutional, professional way of managing money, right? So, I thought that I could contribute. And if you see from my personal perspective, it's a professional challenge, because honestly speaking, I'm not somebody who can, if you tell me that work for a large firm, go to office at 9 o'clock, leave at 5 o'clock, and from 9 to 5 review people, what are they doing, check MIS, look at the MIS, look at the strategy. I'm not office bound. I'm not somebody who can sit and keep looking at Excel files, right? I prefer to do new things. I prefer to meet people. And like I said, maybe I'm repeating myself, but I have some worldview. I want it to be tested. So I just don't want to keep cooking ideas in my head.
Right. And the fact that you decided to do this again also tells me you're not one of those financially independent retire early. कि नहीं बस हो गया, अब घर बैठूंगा, cricket देखूंगा, golf खेलूंगा.
See, I find it, yes, that is a concept, and for some, lot of people, you should enjoy life, and a lot of people have that belief, right? And it's about, that, okay, I've done enough. Now I want to have other pursuits, or I want to be employed gainfully in another form or format. So that's a choice which people make. But, if you see from my perspective, there are a lot of young people today who say FIRE, financially independent, retire early. But then the very same people are educating us and telling us that I don't know whether it will be dollar or rupee or yuan or Bitcoin. Every 10 years, careers will change and AI will disrupt the world. Now, I am 50, right? I think I have quite a few years to live. So forget FIRE. I am actually thinking, how will I keep myself relevant? So I am more like a paranoid person. As long as I am relevant, I would like to work and I would like to contribute. And my biggest fear in life is that I will become irrelevant at some point in time. Then what will I do, right? And then, the other thing that if I have to fire, then, in what currency you want me to save my corpus and, in which country? So I don't have many answers. And I just feel that, if today at 40 or 45, if somebody is going to fire, look, my sense is that the people, like I'm 50, people who are 30, 35 today, my sense is most of them will live 100 years. Highly likely. It's highly likely that most will live 100 years, right? I think my kid, maybe he'll live 125 or something. So I don't know what will I do if I retire.
Absolutely. This is an interesting point you say, that a lot of youngsters, this idea that we'll all call it a day by 70, 75, I think we need to put that to rest.
नहीं 70-75 के बाद भी मेरे को लग रहा है 20-25 साल अगर जिंदा रहना है तो करेंगे क्या?
How do you respond when your investors who've trusted you with their hard-earned money see their portfolios are down by 30-35%? What's the process that you and your team follow? What's the approach?
So I have seen, Manish, very many situations where I have, the first time I'm meeting a client or the first time I'm speaking to a client is when he's down 50%, he or she, right? And that's a very tough situation because, see, generally speaking, we are a social animal, right? If I come to your office, let's say you're a client, and let's say Manish is a private banker, and let's say somebody is a client, and Manish tells me, Aashish, here's an important client of mine. Why don't you come to Gurgaon? Let's go and meet the client. Now you fix the meeting for me, and I meet your client for an hour. Now look at it this way: we are social animals. You are meeting that client practically every month for the last 5 years, and I am meeting the client for the first time. But ultimately, we are humans. That client doesn't expect me to just say, okay, here's my presentation. This is what this is what you should do. Sign up, Doesn't work that way. Even if you are meeting the client every month for 5 years and I'm meeting the client first time, but still in that 1 hour, the client expects me to have at least some basic rapport, right? I mean, an understanding, without the hardware in place, how do you get the software on top of it, right?
Right.
So in these client relationships, the hardware is actually the softer aspects, the relationship or the eye contact or the rapport that you build, and then you can arrive at a talking point where the person wants to establish credibility, establish credentials, establish some liking for the person or some understanding of the person, and then it actually goes. But there are many situations where there is no such opportunity and you're straight away put on a Zoom call or a phone call with somebody who's down 50%. So then in that 45 minutes, you are trying to appeal to various aspects of reasoning, right? I mean, I'll give you a practical example. This may take a minute, but in May 2020, I was put onto a conference call with a client who had invested in a small cap AIF, okay? And they had invested somewhere in January or March 2018,
Right.
which was the peak of small cap.
Right.
And it was a 5-year product. It was not maturing in 2020. They had time till 2023 or 2024, but that's only for later. I'm talking to the client who has invested in early 2018. And the first time I'm talking, while signing I have not met, the first time I'm talking is May 2020 when the $10 is 5, right?
And the world's about to end.
And the world is coming to an end. And this client was actually somebody who was a fixed income investor. He had his own NBFC. He used to lend to small businesses at 14%. But he ended up investing in equity, and he's not used to 10 rupees becoming 5. He is used to 10 rupees becoming 14% compounded or something like that, right? So he says, मुझे तो पता ही नहीं मैं आया कैसे यहाँ पे. And I am explaining to him about EPS and PE multiples and about, how, ultimately we will come out of this, and then the market is so cheap, interest rates are down, the government is pumping liquidity, all the thing. He's saying, ये कुछ नहीं समझ में आया मेरे को तो पता नहीं मैं आया कैसे यहाँ पे. At the end of 40-45 minutes, I had to say, अच्छा देखिए, आप शायद, ये प्रोडक्ट शायद आपके लिए रेलेवेंट या सूटेबल नहीं था, समझ सकते हैं. और जो भी गणित में आपको बता रहा हूँ वो भी शायद आपके लिए रेलेवेंट नहीं है, आपको नहीं समझ में आ रहा है. लेकिन अब आपने मेरे से बात किया, आपको समझ में आया, मैं यहीं पे हूँ, राइट? आके मिलूँगा आपको जब ये मामला ख़त्म होगा. लेकिन अभी आप कुछ मत करिए, मेरे कहने पे रुक जाइए. मैं बोल रहा हूँ ना, कुछ नहीं होगा, रुक जाइए आप. सो ऑल द मैथमेटिक्स डिड नॉट हेल्प व्हेन आई सेड कि भाई मेरे बोलने पे रुक जाइए, मैं हर महीने आपसे बात करूँगा और कोई सवाल हो तो मेरे को फ़ोन करना, लेकिन जब तक मैं बोलता हूँ आप रुक जाइए. ही सेड हाँ ये कर सकता हूँ मैं. सो देर आर वेरी मैनी टफ सिचुएशंस व्हेन द मैथमेटिक्स is of no relevance. It is ultimately, yes, my confidence comes from my understanding of the mathematics and the economy, right? But ultimately, when you're talking to the client, you have to explain or you have to, make your point in whichever way that the client will be able to understand. He did not buy any of the maths, but उनको तब तक भरोसा बैठ गया कि भाई ये आदमी ठीक है. So that's where my confidence comes. Because see, I'll give you an example. हम सब लोग बड़ी बड़ी गुड़गांव है, 40 floors, 30 floors, हम लोग बड़े बड़े बिल्डिंग में जाते हैं. मनीष, आप जब एक बिल्डिंग में जाते हो, आप उसके एलिवेटर में जाते हो, तो आपको, हम सब लोग मैकेनिकल इंजीनियर तो नहीं है ना, मतलब आई एम एन इंजीनियर, बट सब लोग मैकेनिकल इंजीनियर नहीं है.
तो इंजीनियर भी नहीं है,
राइट? तो हमको ये बताया गया है ना कि भाई ये एलिवेटर होता है, इसकी हाइड्रोलिक सिस्टम होती है, इसमें फिर एक फेल सेफ केबल्स होते हैं, ब्रेकिंग सिस्टम होता है. तो भाई आप एक एलिवेटर में 40th फ्लोर तक जाते हो, 40th फ्लोर से नीचे भी आते हो. जितनी बार एलिवेटर में जाते हो, हाउ मेनी टाइम्स यू गेट अ फीलिंग कि इसका ये सिस्टम फेल हो जाएगा, उसकी वो केबल भी नहीं टिकेगी, इसका ब्रेकिंग सिस्टम भी नहीं चलेगा और धड़ाम से एलिवेटर नीचे गिरेगा. ऐसा कितनी बार आपको लगता है? यू डोंट इवन थिंक अबाउट इट.
नहीं,
यू जस्ट एंटर, राइट?
मीटिंग के बारे में ही सोच रहे होते हैं.
हाँ, यू जस्ट, राइट? सो यू डोंट एवरी टाइम यू गो टू एन एलिवेटर, यू डोंट थिंक ना कि भाई ये गिर जाएगा, नहीं ना. तो जितना आपको उसके मैकेनिकल सिस्टम पे कॉन्फिडेंस है ना, उतना मेरे को मार्केट पे कॉन्फिडेंस है, right? Because I know that as long as we have a economy, as long as we have functioning businesses, see, earnings of businesses can fall sometimes. Sometimes they fail to grow. Sometimes they may degrow by a few percentage points. To the extent that we have fundamentals in place, there is a limit to how much prices can fall, right? Let's say we are sitting in this building. If this building is paying a certain, if there are like 100 occupants in this building, out of that, as long as 70, 80, 90, 50, 60 occupants are paying you a rent, right? there's a limit to how much the price can fall. I think you need to develop that confidence and understanding. Only then you can talk. If I am not confident, then I cannot talk and I should not be talking.
There was a time about 2 years ago when WhiteOak was launching 2 NFOs every month. For many investors, that felt counterintuitive and confusing, with every NFO positioned as the next hot sector. How were you thinking of the product strategy at that time? And what was the logic behind launching all these NFOs?
Yeah, so we got caught up, or we probably got lost in the melee of any which way so many NFOs coming in the industry, right? But when it comes to WhiteOak, look, we launched our first mutual fund scheme in July, August 2022. Now, see, in India, what happens, Manish, is that most asset management companies are founded by some bank or broking company, insurance company, NBFC, or some or the other financial conglomerate or an industrial conglomerate. And then by the by, their mutual fund also gets launched. Now, when the mutual fund gets launched, generally speaking, people know the brand, right? But as far as WhiteOak is concerned, it's different. It's a professional, like I already told you, it's a professional fund management company started by a professional. We originally started managing money for foreigners investing in India. Even today, we are one of the larger FIIs investing into India. But when we launched our domestic mutual fund, people didn't know so much about WhiteOak. I mean, although there is credential and competency and track record, but still it's a fact that, mutual funds are a retail product and people didn't know much about WhiteOak. So our quick, early realization was that the fastest way, or the, not fastest, but the more relevant way to build our brand would be to get the track record going. So while there were any which way many NFOs happening in the industry, for us it was not so much about launching the next new hot sector or launching the next new hot factor, right? That was not our idea. Our idea was to get a basic product range in place as fast as we can so that the track record starts kicking in.
Right.
Now, fast forward 3 years, say August 22, now we are nearing, say, July, August 2025. So the first fund we launched back then will finish 3 years now.
Right.
And then every month there'll be a fund which will finish 3 years. By the time the first fund finishes 5 years, the last fund will already finish 3 years. So you will find all our diversified funds, all our hybrid funds, all our sectoral funds finishing 3 to 5 year track record. And then, all the, like say ZFunds has a fund listing. And I'm sure even you look at 3 year track record and 5 year track record. So track record takes time, and, to cut the time taken, we have a very large team. We have 34 analysts which cover more than 1,000 companies. That's our own primary research. So we have the ability to build those portfolios and manage them. So we just thought that we should not take, like, whether an NFO gets us 100 crore or 500, it doesn't matter. Get the product out there, get the portfolio and the NAV going, the track record builds, and then people get to test that, what is our competency and how we are delivering.
Moving on, we've seen young investors connecting more with WhiteOak as an asset management company. What is it about your communication strategy that one sees this trend?
See, I would credit the investors really, because, what I have learned is that today the people who are young investors, right? Let's contrast this. Okay, late 90s when I started my career, people didn't know what is a mutual fund. So when the product category is, there's no awareness of the product category itself. So people either don't buy it, or buy it tentatively, or buy it much less than what they can actually afford to buy, and only buy big brands. Because at those times, the brand is considered to be a marker for the ability to perform. But now what has happened is we have sufficient history of the industry, and people who are young today, they've probably realized that the mutual fund industry, for many other things in life, the brand is a marker for ability to perform. I don't dispute that at all. But in the mutual fund category, it's more about the professionals, it's more about the people, it's more about competencies, capabilities. And people understand that performance is not necessarily tied to a particular brand or a conglomerate. I mean, if you have right people, if you have right strategies, if you have the right competencies, then you'll be able to perform. So previously, Manish, what used to happen was that if you have a brand, I assume you will perform. And today we are living in a world where if you perform, your brand will anyway get built and amplified. So I think credit is to the younger investors, because they've realized what goes into mutual fund performance. Plus, there are platforms like yours, which make the process of discovery very, very democratic.
Right.
And it also, because of the digital interfaces, things are also more meritocratic, right? And plus, the whole digital space allows for much better communication, much better placement of, the right content, which, because content is also something which is a marker for your competency. I mean, how clearly you communicate, what you communicate. And the last thing which I don't want anybody in my firm, or the last thing I don't want my firm to do, is, see what happens in our industry. The industry demands track record, and the industry demands, expertise and competency. So unfortunately, what happens, by the time all of us get there, we are in our 50s, right? But I am painfully aware that all my clients are today 25 and 30. Especially all the HNIs of the future are today 25 and 30. There are very well endowed, moneyed people today who are 35 and 40. So all the people who I'm trying to talk to, I'm aware that they are anywhere between 10 to 30 years younger to me. And what I realize is that people in my generation, in any generation, every generation thinks कि हमारे बाद का जो generation है उसको कुछ ज़्यादा पता नहीं है, right? जैसे मुंबई में अलग भाषा में बोलते हैं, but the history of the world says that every generation is smarter. So what I try to do, or what my firm tries to do, is that we try as best as possible not to be preachy. Because I know that people who are 10, 20, 30 years younger to me, I'm convinced they are much smarter than me. I have zero doubts about it. I have no doubt that people who are young today, their socioeconomic background, their education, their risk appetite, the history of the market they have seen, the resources at their disposal, they are far superior to what I had when I was 25.
वो हर जनरेशन का सॉफ्टवेयर अपग्रेड हो रहा है.
बिल्कुल अपग्रेड हो रहा है. ऑपरेटिंग सिस्टम
हर जनरेशन में ऑपरेटिंग सिस्टम अपग्रेड हो रहा है.
So they are much smarter. I think we should not preach to them. I think we should just tell them what we can do, and then they will assess whether we are good enough or not. और मेरा क्या लर्निंग है कि भाई किसी को ये मत बोलो उन्होंने क्या करना चाहिए. तुम ये बताओ तुम क्या कर सकते हो, फिर वो बोलेगा अपना रेलेवेंस है कि नहीं है. Right? I think people of my generation spend too much time trying to tell others what to do, or trying to point out to them what they are doing wrong. I mean, never assume that सामने वाले को पता नहीं है वो क्या कर रहा है. सबको पता है वो क्या कर रहे हैं. तुम ये बताओ तुम क्या कर सकते हो.
Which then brings me to a very controversial question. What is it with your experience you will tell this generation to unlearn?
I will never do that. I will never tell them anything what they should do. I'll only, if I'm asked, I give a perspective. And that also happens very rarely. So I just observe. See, I mean, look, I wouldn't say don't do this. If I'm really put into a situation where I have to say what to do, then I'd say, how about you try this? Right? I can make a suggestion, but I don't think it's my place to tell anybody what to do.
Right. So if you had to start an asset management company in 2025, what would you do differently?
Actually, you know what, Manish, the painful reality is that this industry is not so much about doing things very, very differently. It's an industry about discipline. If you do the right things day on day, month on month, year on year, you will eventually stand apart. Because what the industry woefully lacks is consistency. See, take an example, fund performance. There's no dearth of people generating highest return or highest alpha. And you are a fund selector, you decide what funds your partners will offer or what your platform will offer. And I'm sure by now, Manish, you must have seen, our problem is that every second year, the best performer changes.
Absolutely.
And there's a wild winner rotation. So that is happening because people have serious biases or tilts in their portfolio, right? I mean, somebody is an out-and-out value investor, somebody is an out-and-out growth investor, somebody loves small cap, somebody is betting on some factor, somebody is betting on some top 3 sectors. But the BSE 500, which is our broadest benchmark, it is what I call Sarvagun Sampan. BSE 500 is not growth or value, small cap or large cap, this factor or that factor, growth or momentum. BSE 500 is everything. So if you have to beat BSE 500, that needs scientific portfolio construction. It needs managing for consistency. It needs optimization. So our business is about consistency. It is about optimizing. It is not about maximizing. So I think, people, I think experimenting too much, taking too many risks, actually that's a lacuna for us. So I don't know if I've answered your question, but
So
basically,
I think what you're saying is you've avoided those pitfalls, and given a choice, or if you were to start again, you would again avoid those pitfalls.
Yeah, maybe I would change a little bit about, for example, if like I personally feel that we need more solutions and we need more, fund of funds and those kinds of things. So I would work on some new ideas if I were to set up a firm. But that would not be some groundbreaking, path-breaking disruption. I mean, I'm wary of those words. You don't just go around disrupting for the sake of disrupting. Sometimes just consistency and discipline is disruptive enough.
Especially when it comes to money, which is a serious business.
Yeah, exactly.
Moving to our next segment, which is Inside My Portfolio. This is where we'll ask you about your finances and how you manage your wealth. What's your personal definition of wealth? Is it a number? Is it a feeling? Or is it a sense of achievement, sense of purpose?
See, if I can, if my family can, if my family can access, it's like this, it's in a particular order. Like say, for example, family, broader relatives, society, right? So if I can ensure that my family first and then my relatives, if they can have everything, if they can have all the means, and if they can have a comfortable life, I think that's that. And then obviously, what I feel is that, some of us, some of us actually have a vantage point where we can say that, okay, we have earned some money, we have earned some wealth, correct? Now, my personal opinion is that 99% of the people, unfortunately, don't have the vantage point which probably you and me have. See, I meet a lot of people who are very philosophical. So, for example, I once met somebody who said that, I had I do public speaking. So I gave like a long bhashan. And sometimes when I give a long bhashan, people get very convinced that they should invest. So this gentleman was 81 years old. And he said that, beta, my portfolio, he was a businessman, industrialist, sold the business. He had 100 crores. He said, beta, मेरा तो portfolio 100 crores का है. आपका भाषण सुन के मैं क्या करूँगा? तो मैं बोला, अंकल आप 81 ईयर्स के हो, 81 ईयर्स में 100 है, सही सही इन्वेस्ट करोगे तो 85 ईयर्स में 200 हो जाएगा. तो he said, तो मैं क्या करूँ उसका? So I said, see, आप ऐसा सवाल पूछ रहे हो तो सोसाइटी का क्या होएगा? क्योंकि 99.999% के पास आपका वो 100 ही नहीं है, उसके पास वो स्टार्टिंग पॉइंट ही नहीं है. तो जिसके पास पहला 100 नहीं है वो 200 का तो बात ही नहीं कर सकता है. सो मेरा वर्ल्ड व्यू ये है कि भाई जिसके पास भी जो भी वेल्थ है, दे शुड मैक्सिमाइज.
Aashish, what's your net worth?
So मेरा खाली self worth है. You'll have to call my wife and interview her, then she'll be able to tell you.
Clearly, here's somebody who values their self worth more than their net worth. More power to you, Aashish. Right. I've come across your interviews where you've spoken of your investment in commercial real estate. Talk to us about your asset allocation and where does commercial real estate fit in?
See, so Manish, first of all, I'm a out and out equity investor, right? So I have always invested in equity forever and ever since the time I started my career. And I already told you that I started with direct equity, made some mistakes. Then I realized that, your heart should be in the right place. If you're telling everybody mutual fund is the right product, I finally, through my experiences, got convinced that equity and mutual fund is right for me. Second is because of compliance and regulation, I don't do any direct equity. So whatever products WhiteOak manages, those products I invest only with WhiteOak. And whatever products which WhiteOak doesn't manage, say for example private equity, then I'm obviously have to invest elsewhere. But I don't do any direct investing of any form. Real estate is something which I started seriously investing amidst COVID in 2020. Because there were certain liquidity events. And in 2020 and more importantly in early 21, the stock market came out of the woods. But real estate, for example, was in the doldrums. Now, why did I start diversifying? And your question was on commercial real estate. See, there's another thing which is not the given wisdom. Like, for example, most of the people think you should not take loans and you should not leverage. I have a slightly different worldview. One is, वैसे मुझे फनी भी लगता है कि सबको बैंक्स के शेयर्स लेने हैं, लेकिन सब बोलते हैं कि लोन मत लो. तो तुम बैंक्स का शेयर्स क्यों लिए हो भाई? But anyway, that's on a lighter note. See, your question, it's a retirement plan for me. Eventually, I'll pay off the loans. But see, how it works is that you pay, when you buy a commercial property, first of all, I spoke about leverage. I think you should never leverage for an asset class which does not have cash flow. If you don't have asset, don't leverage. And if the asset is not going to produce cash flows, don't leverage. But when you look at commercial real estate, say there is a grade A commercial property. What happens is, let's say you pay $30-$35, the bank pays $65-$70. You ensure that the rent pays the EMI. So what will happen is that eventually, as the EMI gets paid, your equity starts rising. Second is, typically speaking, rentals get reset 5% a year or 15% in 3 years.
Right.
Correct? So the rent keeps going up. Third is, when interest rates go down like they've gone down now, right, then ideally the rental yield should also go down, which means the property would actually appreciate. And lastly, if I eventually keep on repaying, my equity keeps rising. At some point in time, if I repay, I can retire because it will be a source of income for me.
Source of monthly cash flow.
Yeah. So I don't think of real estate as a taboo. I don't think of leverage as a taboo. If it is done for the right intent with the right arithmetic, it works very, very well. And by the way, real estate is the only asset class where somebody will happily give you leverage. Nobody gives you leverage to do
FNO.
FNO intrinsically has leverage, but equity, those are risky things. Right. They have no cash flows and the asset price are unstable. But if it's a grade A commercial property, which is leased out to a grade A tenant, I would say the asset prices are reasonably stable. So, and it has cash flows. So leverage should be done for the right purpose in the right manner with the right mathematics in place. And then if it is done rightly, it works very, very well.
Which brings me to my next question. What is your most successful investment?
My career only.
Right.
My career only. Because I don't think anything can give me, and by career, what I mean is that, say for example, you say that I'm helping somebody to set up a business or set up an asset management company, right? I don't think that more than my efforts, more than my equity in the business, I don't think anything can give more than that return ever.
So entrepreneurship's been really the best thing you've done.
Absolutely. Taking some entrepreneurial risks is the best investment.
So is there an investment you didn't make, something you said, nahi rehne dete hain, and now you think, arey nahi, wo investment kar leni chahiye thi?
Not really. I may have sold some investments or sold some equity early. Maybe in hindsight, you should never sell, right? बट क्या है कि ऐसे देखेंगे तो यार मतलब जिंदगी आगे नहीं बढ़ेगी, मतलब कल सुबह उठना मुश्किल हो जाएगा. So I don't actually go and keep checking really.
And outside of WhiteOak and Motilal Oswal, are there any asset management companies you have invested in? Are there any other mutual fund schemes in your portfolio?
Private equity, no, not mutual funds. I don't have any mutual fund other than where I have worked. So, when I used to work for Motilal Oswal, I used to invest 100% out there. Then after a few months, I kind of transitioned, and now my investments is only with WhiteOak.
Right. Our next segment is beyond mutual funds. So we'll ask you stuff about other investment instruments other than mutual funds. So Aashish, I'm an investor. I have 1 crore. Should I invest in WhiteOak mutual fund or WhiteOak PMS?
So if I don't have any other information, I'll just say mutual fund. Simple and standard.
Why do you say that?
See, the reason is, Manish, because like I already mentioned in some part of the conversation, there are many people who invest in equity directly, right? And they have a flair for, they want to know, they want to know why a stock is bought, why a stock is sold, when it is bought, when it is sold. They prefer the transparency, and they feel that, if they have a PMS where it's money, stocks are in their demat and a PMS manager is doing the transactions, every transaction is reported and, they'll be able to track the portfolio. So for them, people who are otherwise investing directly in equity, PMS is a great option. But for the general investor who's, professional doing various things in life, just fill it, shut it, forget it.
Right.
There's somebody who's managing the portfolio for you. For them, because what happens in a PMS, there is a very high level of transparency. And high level of transparency demands high level of maturity to understand. अगर हमको एक सर्जरी करना है और हमारा सर्जरी एनेस्थेसिया के साथ हो रहा है, फॉर एग्जांपल, नॉट इन अ नेगेटिव सेंस, एनेस्थेसिया के साथ सर्जरी हो रहा है तो शांति से हो जाएगा, आप डॉक्टर को ट्रस्ट कर रहे हो, कर दिया, हो गया, राइट. लेकिन अगर एनेस्थेसिया नहीं है, आपको लिटा दिया ऑपरेशन थिएटर में और आपको कैमरा में दिख रहा है डॉक्टर क्या कर रहा है, हाँ, और फिर बोले ऊप्स ये ऐसे नहीं करना था, तो क्या होगा आपका? So what happens is that everything which happens in a PMS happens in a mutual fund. But in a mutual fund, You get a portfolio once in a month. You don't see every trade and transaction. You just see NAV. वो NAV में expenses, STT, brokerage, सब कुछ. You just see an NAV movement. So you're like, okay, somebody is managing here. I'll check the NAV once in 6 months. It's fine. But in a PMS, every transaction, किस भाव में खरीदा, किस भाव में बेचा, right? So then अगर आपको इंटरेस्ट है वो सब जानने में तो ज़रूर आपको PMS करना चाहिए, लेकिन उस लेवल का ट्रांसपेरेंसी हैंडल करने के लिए आपको भी अंडरस्टैंडिंग और मैच्योरिटी चाहिए. So it's for two different personality sets.
Now, with so many new and flexible strategies coming up for investing, whether it is a step-up SIP or whether it's a flexi SIP, the way our product book is evolving in the industry, do you think PMSs and AIFs 5-7 years down the line will still retain relevance?
See, look at it this way. Let's say talk about PMS. Now, what is the reality, Manish, that mutual funds have some tax advantage, right? Because every mutual fund is a trust. So, if you directly buy and sell stock, then at every instance of buying or selling, at every instance of selling, you will have a capital gain implication.
Right.
Mutual fund being a trust, the client pays on redemption. But when the mutual fund is doing any rebalancing or buying and selling, the mutual fund doesn't pay. So clearly in a mutual fund, there is a benefit of postponing the tax and avoiding tax on transactions within the scheme. If you're doing direct equity, then every time you sell, you will have a tax implication. Right. And PMS is like, you've just given a power of attorney to someone, but Absolutely. It's basically direct equity.
Absolutely.
So the point is that if everybody was only looking at taxation as a pivot point for their decision, then everything would have moved to mutual fund, no?
Right.
But no, people hold, I think if I'm not wrong, 13-14% of our equity market capitalization is basically people holding stock in their demat accounts. And there are so many people who are buying and selling stocks, right? So they all are not moving to mutual fund just to save tax. So as long as people are doing direct equity, PMS will be there. Because PMS is a service provider, which is that instead of you doing direct equity buying and selling, there is a fund manager whom you have given a license, a power of attorney who's doing it for you.
So as long as investors find strategies that will deliver on their financial goals, there will be a space for PMSs and AIFs.
Absolutely. And AIFs are obviously, say you have venture capital, you have private equity growth investing.
Or high yielding debt.
Or like I told you, what I do for commercial real estate, for example, there are actually AIFs also who do it for clients, right?
Right.
So all of this will be in AIF.
What do you think the role AI will play in fund management strategies going forward?
See, where people are doing a lot of work, which is, quant or technicals, I think, they can clearly benefit a lot, by, putting AI engines and automating and machine learning and refining strategies and automating them further. People like us, who are still using human judgment, bottom-up stock picking, average holding period like 2-3 years, right? Doing a DCF on every stock that we invest in. So for us, usage of AI can obviously be to increase efficiency, to sharpen our research processes, to, process a lot more voluminous information from diverse sources. So for us, it's very important to enhance efficiency. But ultimately, we will still, use human judgment to make the decisions. See, if you want to trade, if you want to buy something based on quantitative indicators, and when those quantitative indicators change, you want to sell, right? Clearly, and where you don't want human or emotional judgment to creep in, they will benefit immensely. But people like us whose average holding period for a stock is about 3 years, we are hypothesizing the future of every company that we are investing in. I think we will always have a mix of, technology and human intervention.
Also, AI will not be there to make that phone call in May 2020 and tell the clients, "Ghabrana nahi." Hopefully not.
I
you never know.
Because, if it's ultimately, it's quite possible that the call is AI generated after looking at the portfolio and the guy answering is also AI, right? But hopefully the client will circumvent all of that and call me directly.
And before I end, let me get back to layers. How many layers should there be in the portfolio of an investor who's, let's say, 35 years old and is looking at retiring in Dalhousie?
Retiring at what age?
That's a good one. Let's say 45. Okay, let's not say 45. आपने पहले ही कह दिया 45 is no age to retire. Let's say he's looking at retiring at 60.
I think it's just be, couple of multi-cap funds. That's it.
Only 2 layers. So the asset class is equity.
Yeah.
And all they need is multi-cap funds.
Multi-cap, yeah, absolutely.
Thank you, Aashish. Thank you for coming on.
Thank you.
From building institutions to navigating market storms, Aashish reminded us today that great investing is built on clarity, conviction, and staying the course. Thank you for joining us. We'll see you on the next episode of ZFunds, the Sahi.Asaan podcast.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.